Hello, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, a crackdown is coming in Australia on capital gains tax concessions for property investors. But first, January retail sales data was strong in the US. They rose 5.6% above the same month a year ago, and more than expected as households bought electronics and a range of other goods, pointing to sustained domestic demand that should bolster American economic growth in the first quarter. Also assisting the positive view, business inventories were up 2% in December. That's 2% higher than the same month a year ago. But that is actually lower than the rate of price inflation, which has come in at 2.5% in January. The CPI data is now running at its highest level since February 2013 and underpins the US Fed's recent signals that they're on track for 3 rate hikes this year. Financial markets haven't believed the Fed's dot plot recently, so there may be some reassessments going on about now. It is not all rosy news, however. Industrial output was unchanged in January compared with the same month a year ago. In China, they're back singing from the old economic script. In January, they approved more than 18 large fixed asset investment projects, with investment totaling $31 billion as they try to stabilise economic growth by boosting infrastructure investment. It was lower than the $37 billion investment approved in December, but higher than the monthly average of $29 billion reported in 2016. In Europe, their parliament has ratified their trade deal with Canada, one agreed in 2016. This comes despite the usual trenchant opposition from farmers in the EU. In Australia, their federal government is in deep deficit and looking for ways to return to surplus. Many options are blocked by uncooperative states, but one getting renewed focus is a crackdown on capital gains tax concessions for property investors. It is understood the policy will be worked on will not apply to investments such as shares, nor will it wind back negative gearing, which is a major rort in the Australian property market. In New York, the US Treasury 10-year yield is sharply higher on the US inflation data, now up to 2.51%. Oil prices are essentially unchanged today and still just over $53 for the US benchmark, while the Brent benchmark is just under $56 a barrel. The gold price is marginally higher today and now at $1,224 an ounce. And the New Zealand dollar is higher this morning as well. It is now at 72 US cents. On the cross rates, we're at 93.6 Aussie cents, and against the euro, 67.9 euro cents. The TWI is at 77.5. I'm David Cheston. That's 90 at 9, brought to you by interest.co.nz.